welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and here in a second I'll be adding up Taylor and Jeff. Jeff dropped off, so we will. Let me go ahead and add Taylor real quick. There we go.
Yeah, we had the whole office shut down, so I don't know if Jess.
Oh yeah. You guys lost power. All right.
Well, it came back on, but it's the weirdest thing. It's like it's happened multiple times within the last month.
All right. Let me get Jeff in here. Jeff is going to be the faceless man this morning. So,
that's right.
All right. So let's actually, you know what? Let me introduce some stuff real quick here. Let me share my screen. So
unfortunately, I just realized I hung up on us because I was trying to go to another screen and see something. So since I'm driving about, I'm just gonna be the disembodied voice and no access to research this time around.
Well, let me go ahead and introduce the socials. So anybody that's watching on X or Pump.Fun, if you want to come over to YouTube and join the chat, that would probably be best because then you can ask questions and get those questions answered. If you would like to join our Discord, this is our Discord. Have a great group of people in there. If you're new to DeFi or airdrops, crypto, looking for a really good community that can answer a lot of questions for you. It's a great place 24/7. There's always somebody in there. We got people from around the world. Really, really helpful. Great place to kind of be a part of a community and kind of tap into knowledge from people in different stages of their crypto journey. And then last but not least, our DeFi WIZE newsletter. And this is something me and Taylor get up early every morning, about 4 or 5 in the morning, and put together to send out Monday through Friday. It's just shy of $20 a month, but a bunch of great content in there. And actually have been starting to get a couple of people. We've only had it out for about a week or two, and have a couple of people that have given me basically comments about how much it saved them. As far as trading ranges, ranges in liquidity pools, just the news that's coming out, if everything's trending bearish or bullish. So a lot of great content in there, and it's about a 5 to 10 minute read with your morning coffee, and you'll know exactly what's going on in traditional markets and crypto markets. So with that, let's go ahead and cut on over to this screen, and let's get into it. Taylor, let's start with you. What are you seeing in the markets in both crypto and TradFi and everything that's going on?
So when we began the newsletter, I was putting out because about sometime around mid-October, I pulled most out of the market because they were signaling a turn in the market that was happening, and the crypto market that I'm talking about. And roughly, I think I remember I said something to you about it, but roughly what really has caused the problem is, one, you got to understand when you're investing, you have to understand the macro environment that we're in. And when we make these shifts and you make a shift into where the dollar is going back up, you have inflation issues, you have high volatility that's coming about. This often signals on a macro level that there's a pullback. And so if everybody that's been going to the newsletter, you've been seeing on the little chart that we have of the price range, it has bearish trend on everything since we've started this newsletter. And generally the advice is you don't invest in bearish trends. I know a lot of people, they just hold through the different environments. If you're DeFiing, that's okay. If you are going to hold through bearish trends, that's something very scary. You usually want to wait until things go bullish again, and then don't immediately jump in, because usually when something trends back bullish, that means it's gone up for a while. and there'll be a little bit pullback, and then you can get into a good environment where you buy it. But we give the ranges, and they change daily based upon volatility. Right now, if you watch the VIX in the market, the VIX has been up above 22 is usually where people say you shouldn't, this is a bad environment to be in. If the VIX hits 30 in the next couple of weeks, you're going to see in traditional markets, things are going to come down drastically. Now, people will often say things, when things are going down, dollar cost average in. And, you can use that strategy, but you have to be very careful when you're doing that kind of strategy, because you could be dollar costing into a long bear market. And so usually you wait a little while and just be patient for things to kind of play out. If you want to dollar cost average back in, then okay. But use the trends that we're giving you, use the ranges, understand that range changes every day based upon volatility of the market, option buying. All these things are used to give us those numbers that we determine, hey, this is the range where things should trade in for the day. That those are the ranges that we're looking on a daily thing. So if you notice on our trends, usually it's been hitting the bottom, and then you'll get a little bounce back up. But we expect, as long as we're going to be the bearish trend, it to keep going through the bottom of the ranges. Now, it might level off here for a week or two and kind of test what's going to be happening. But by all measures of what's going on, this is going to continue for more than just November and December. It looks like it's going to go into January and February. So now, that being said, everything changes based upon the numbers that we get. So don't take this as I'm telling you what the future is. I don't know the future is. Nobody knows the future. If I did know the future, I wouldn't be telling you guys stuff, because I would just be a billionaire right now, and I'd be on an island somewhere living out the rest of my days. All right.
There you go. Let's see. What about you, Jeff? What are you seeing in traditional markets? And you've actually dipped a toe into DeFi. How's your DeFi treating you?
Not well, because I started it literally like the day before y'all's first newsletter of bearish trend, but I'd already deployed it. But it's
But you're just doing a little. You're just learning.
fun, and I'm just messing around with it. But I think I feel like a broken record here. But I saw let's see, some things I remember. So yesterday I saw that 82 or something like that, 82% of the stocks in the S&P 500. Now I want to think about this. 82% of the stocks in the S&P 500 are down 20% or more from their highs this year.
Yeah,
that's a lot. That's a lot
the
for
market's
traditional
still up
markets.
for the year.
and we're
That's
just
a
starting.
ton.
We're just starting in
Now,
this new regime of change that we've just seen.
right. So there's this. We have a bipolar market thing that happened the last week was the NVIDIA earnings. So NVIDIA earnings were spectacular, but
I want to talk
with a
about that in
caveat.
just a second.
The caveat is they did a bunch of accounting things that when you look at it, not so spectacular. And so the market shot up, and then it immediately went right back down on it. Question, you combine that, which I'll let Taylor talk about that, but you combine that with the fact that just in the last quarter, Google, Meta, OpenAI, all these companies have issued $3 billion in debt just for funding expansion. It's getting really interesting. There will be books written about this. It's not an issue. It's not a question of if, but when, and how much money is to be made before it blows up, and how much money is to be made when it blows up. And then lastly, I would say, I think I sent both you guys that text last night for this, but it's a little troubling with the CEO of Anthropic, which is one of the 5 largest AI companies in the world, says that in the next 1 to 5 years, we'll see between 10 and 20% unemployment levels due to AI replacing white collar jobs at the entry level. So that was interesting. So I don't know, guys. I mean, I know I come on here and I'm always like doom and gloom, but man, I'm telling you, we are living in an epochal change that will make the whole internet circa 2000 look tame, in my opinion.
Mm-hmm.
Yeah, the sweet, but it was very interesting to watch the Nvidia pump because uh, it was like you could almost see the game that was being played with retail investors. It you can actually see on the chart. It's like this shooting up, and then there's like this slow leveraged over, and then it just tanks. And it was purely played beautifully by large institutions to basically get out tons of money out of Nvidia while everybody was going, oh, well, look at the numbers were great. Well, like Jeff pointed out, they made the numbers look great, but they changed some of the accounting stuff behind the scenes where if you didn't really understand what was going on, you were going to think that this was another boom where you were going to put in. But that being said, you got to understand, like, this is a common play when you have this happen, is the switch into. Jeff, is that there's some lady
This navigation.
like some woman? Jeff, no.
I don't have any navigation going on.
Yeah.
And
But
Marie has navigation going on, but it's not on my phone.
But
okay.
but wasn't there like some sort of circle jerk that was going on with Nvidia and a couple of other companies where they were basically propping up each other's numbers or something like that?
I don't know. I'm not an expert on the video at all, but it was I was talking to a friend in the office and who's heavily into NVIDIA, and I was like, I would get some out, and
Where did it
she,
go?
came back the
Had to
next day
click
and
on
was
it.
like, oh
It
look,
didn't
it's
go.
going up. Like, if I would have pulled out, and then now it's down, and it was sad to kind of watch what was going on, but. Uh, it's this game that's being played, but you got to just understand what's going on in the traditional market. We are now in the slowdown, and we're going to have a pullback for a while. The problem in the crypto markets that really happened in October is there was so much of this
Look,
pump,
think McKinney.
leverage, and then it
Leah
all
Peter
popped.
McKinney
And
around my
so
house,
many
around your
people,
house. That's the way we're going.
what do they call it? You get wrecked? Is that what they call it when they had all their liquidity pulled and everything like that?
Oh yeah, when they get liquidated.
Yeah, and that was a huge event that just really took a lot of the profits out of the market. And so you had that behind the scenes. If you weren't paying attention, you didn't know the macro environment. It was turning into this environment where the dollar was surging. When the dollar surges, usually Bitcoin goes down.
Mm-hmm.
And so we had a whole year of the dollar falling, and then the dollar is now making its comeback for this last part of the year. And so that cascaded at the worst timing you could have in the crypto market, which was you had this pop that happened, and then the dollar was surging. So people pulled out and went to dollars. I mean, that's what you do in those environments.
Well, let me propose this to you, and let me know what you think. And this is just me spitballing, but usually in crypto and in traditional markets, towards the end of the fiscal year, or not fiscal year, but the calendar year or the tax year, you see people wash trading a lot. And so I've been wondering if a lot of this dumping is basically big money dumping the market so they can wash trade for tax reasons. I mean, do you think that maybe that could be a contributing factor? And we might see January, February, Q1 of 2026, the liquidity flow back into the market and pump the markets back up.
Well, right now you have the fact that it was like $19 billion was lost in October from all that what do they call that, Black Friday of crypto.
Oh yeah. I was it October 10th in the crypto markets. It was about $20 billion.
Yeah, and so I mean that's
The
a ton of
largest in
money in
history.
the crypto markets, and so you pull all that out, and then you have this free fall that's basically happening. Plus, you have all those things you're talking about. People are pulling money out and reallocating money to different sectors. But with institutions, they look at volatility, they're looking at the environment that's going on. And so a lot of money is pulled out of equities and put towards, a lot of bond buying has been done because bonds have been
Did we
signaling,
lose?
a bullish trend right now. And so,
Did I lose you guys?
No, I muted you because like whatever you have going on there was like we were listening to all of it.
Yeah, I was trying to figure out where to go. Right. I'm sorry about that. We were trying to figure out. I'm in a car that doesn't have Bluetooth, so I'm using my earphones, and it's a total pain in the ass when you have to figure out where you're going for your next
Oh, okay.
appointment whilst having
No,
this
that's just like I
conversation.
said. That's why I muted you. It
But
was just
separately, it all went black for me. I haven't heard you guys though for like a minute and a half.
yeah, so we were just talking about this. The October event in crypto where $20 billion basically was wiped off the books because so many people were leveraged too much and it all got pulled on them. And that's, if you're leveraging towards the end of a bull market, I mean, you got to take your profits eventually. I mean, that's, you definitely should not be leveraging if something's been going bullish for as long as it had in the crypto market. So, but that being said, we are in this current environment where we're going to have a pullback. How long, we don't know, how big, but it looks like in crypto and in traditional markets, there's going to be a pullback for a while, and we're going to see kind of what plays out. Now, all that can all change if things kind of level out here over a short period of time and work out. It's just something. There's, like Michael will, I think you tell your audience all the time, there's two ways to invest. You can treat this like a business where you're constantly watching it and getting in and getting out. Or you can, kind of do what Michael does, which is, hey, I know what environment I'm in and I'm always DeFiing. And when things are going down, I think you go to full ranges. Yep. And then other environments, you'll switch up your range cycles and try to make a little bit more profit when you see a bullish trend happening.
Well, usually, in bearish trends, I'll go into full range pools, staking and lending, because no matter what the price does, I have full. Well, in lending and staking, I get full exposure to price appreciation or depreciation, but I'm always earning. So I'm always stacking more assets. And, when the markets go back up, that my deposit goes back up, all that. Full range pool, same thing. I'm just always stacking more crypto. Whenever if we do go into a bear market and we start to trend sideways, then I go into ranged pools where I can set narrower ranges and earn a lot more in a sideways market. And, then of course, if I see that the markets are going to start pumping, then I'll either pull everything out, sit in spot, get full price appreciation, or if there is liquidity pools or, something, like obviously lending and staking, same thing. I get full price appreciation and I'm still earning. But my full range pools, I might pull those because I want to get full price appreciation. And if you're in a full range pool, you're not going to get full price appreciation. So if there's something like a range pool that's, making astronomical, APR or something like that, that's like a USDC wrapped ETH or, a crypto pair of, two assets that I want to stake or I want to build both those bags. Like say it's, what's a good one? Arrow wrapped ETH. If I end up all in, Arrow or all in wrapped ETH, I'm cool with that either way. Wrapped ETH and Coinbase wrapped Bitcoin, same thing. If I go out of range on that and I have a bunch of ETH or a bunch of Bitcoin, I'm happy either way. So if I can just, keep stacking assets and what I'm earning is outpacing any divergence loss, I'm good. So You just have to understand what, and I preach this all the time in the DeFi Academy, where like when you're building your portfolio, is you before you invest anything, you need to know your risk tolerance and what your financial goals are. Because if your financial goals is to be every month be pulling your yield or your earnings to augment your lifestyle, it's a much different investing style in DeFi. If you're trying to stack assets, that is a much different style than the earning to live off the yield. David is huge on our Wednesday show. He's huge on living off of his yield, whereas me and Jake, and I kind of feel like Taylor's the same way. He wants to just build his bags because we see long term what these projects are building out, like with Aerodrome and ETH and Bitcoin, and we see the future for these projects, and that's what we're trying to do. So, Jeff, what do you got?
So, well, I was just going to say, so I do think you make a really good point, though, that, um, it's sort of like, it's like the Olympics, right? I mean, it's, are you a cross country marathon athlete or are you a power lifter? Like you train completely differently. That's ironic I'm saying that because I'm not an athlete in any way, shape, or form. But my point is simply, you
They're the
cannot, if you're doing liquidity,
competitive eating.
right, staking and liquidity pools and loop, all that stuff is not a set it and forget it process. At least not a set it and forget it process in a bear market or a market this volatile. Now, if you're somebody that thinks,
lending and staking can be, if you're bullish on those assets long term. If you're just going to
okay,
hold those assets no matter what. Now, if you start borrowing against what you're lending, then you have to keep an eye on it because you can get liquidated. And it happened to
or
somebody in our
even
community.
or even just the thing I started doing with the liquidity pool. Like, I blink and I'm out of range, right? Well, then I got to make a decision. Do I want to wait for it to come back in range or do I want to rebalance and try to capture more yield? Understand I'm locking in some losses potential. So, like, my point simply being that you know, there's a whole lot of flavors to this. And I think that's why it's important for people to do things like come to your DeFi Academy and watch the shows and take advantage of the materials because I think this is a place that a lot of people can get inadvertently hurt if they're not paying careful attention
Oh yeah.
or if
No,
they
no.
don't know what their limits are.
Well, and if you don't understand what you're depositing your liquidity into, like I said, I'm not going to, call him out, but there was a gentleman in our community that basically lent out of roughly $10,000, and then he took out a loan, but took out like an 80% loan to value, and so Bitcoin was roughly at $100,000 when he lent it out, and took out the loan. And so when Bitcoin dipped below $80,000 or around 85, to $80,000, he hit the liquidation point and got liquidated. So, he still has the $8,000, the loan that he took out, but he lost the $10,000 worth of Bitcoin. So, you need to understand, these, strategies. If you're taking out loans against your, deposit, you need to understand what that means. You need to understand the mechanics and how all that works. And if you watch those and you have the liquidity on hand, when you start getting down towards your liquidation point, you can actually pay off some of the loan to get healthy again. But again, you need to understand these different positions that you're getting in and how they work, or you're at risk of getting liquidated. So real quick, I do want to hit this question. Was Aerodrome compromised? Yes. So over the weekend, Aerodrome was compromised, and they were able to lock it down. Only 700,000 of liquidity was affected. Aerodrome is going to be giving grants to anyone that was affected to pay them back for anything that they might have lost. Great to see. That's the kind of thing I want to see from a platform to give me confidence in using it. And there is some alternate URLs they have people using right now. Do not use the main URLs. They actually shut those down so that people can't accidentally use them. Later on this week, they'll be relaunching. But that's kind of what's going on with that, Stan. So
He
I
also
wanted to
brings up,
make a comment based on what you just said there. I'm gonna be real quick, Michael. What you said, I remember I listened to a hedge fund manager once, and I don't know who it was, but he said, I never, ever, ever enter a position until I've run through the mental exercise of what happens if I'm completely, horrifically, and immediately wrong. And and so his point is he knows the absolute worst case scenario mathematically on any position he takes and is hedged appropriately depending upon what he's comfortable with. And I thought
well,
that's always stuck with me, right? That's a smart way to approach it.
well, in the military, we call it Murphy's Law. I mean, it's and we always say,
Right?
plan for the worst, and no matter what, you're pleasantly surprised.
yeah. One thing that he talked about also his question about UBI, universal basic income, is that the answer? And one thing that people have to understand, we'll probably in the future have universal basic income. The big question right now, people have to understand, well, why do we have the system designed the way we do? Well, in reality, our current system, you have to have most of your population at almost poverty level in order to get them to go to work to do jobs that people don't want to do. That's the reality of the situation is most people don't want to get up every morning and have to go do jobs that they're currently working. And so the only way that we've known to get human beings up and do jobs they don't want to do is basically put them in a situation where they're completely desperate. And I know everybody doesn't like that, and it makes them upset. But at the end of the day, you like it when your power turns on. You like it when your internet works.
Mm-hmm.
You like it when you can go to the store and buy food because it's on the shelves.
Yeah.
But you have to realize there are hundreds of thousands, millions of people doing jobs they don't want to do because you can do all that. And the only way that
Right.
we
Like the horrible storms we had. Somebody has to go out in the shitty hail and the rain and the cold and fix the power buckets. If that person's getting 100 grand a year to sit home, are they going to go get up on that cherry bucket and fix our power?
The robots are.
But that's the reality of the situation is when can you have a system where universal basic income works is when robotics can do those jobs.
Mm-hmm.
That's when you don't need humans to go out to do
100% agree.
jobs that they don't want to do. And so really you're not going to see universal basic income until you see you see a robot climbing up, some ladder fixing something. When you see that happening, then that becomes a reality that you can have that type of system. But I remember this happening because Jerome Powell, he kind of said it that they had to increase interest rates drastically, and he kind of slipped and he said along the lines of because people have too much money. And his point was they weren't going out and doing the jobs that no one wanted to do. People were just like, oh, I don't need to work right now, and I'm not going to go do that job. And so they were looking around. And it's this hard reality that we live in that we basically still in our society, still today, the majority of things are very difficult to do, and the majority of people don't want to do them. And it creates this well, why does this person get all the privilege of being wealthy? And it's just like, well, the system isn't fair. It's not designed to be right. In America right now, the people who make the most money are the people who do ridiculous thing of just transferring paper between people. And it is ridiculous because it's not the most valuable work that's done. The most valuable work that's done is people that go out and actually work with their hands and build things. Like your power turning on every day is far more valuable to everybody than whether or not a hedge fund advisor, invests in the right, investment or not. But that is where all the money is today, is in transferring paper. Like even they showed this statistic where doctors, the cost of healthcare isn't because you're doctors and nurses.
No.
It's all administration cost. It's all the people who sit behind the desks, and they're trying to make more profits, moving money around. And so hospital administration has bloated. Your school, the reason why universities cost so much isn't because the teachers cost more. It's because you have all these administration jobs where people are taking most of the money at the top, and then it's not going down. And so the reality of the situation.
You mentioned those two things though, because both of those, like healthcare costs, used to be reasonable until government got involved with insurance companies. And college used to be a lot more affordable until the government got involved with student loans and subsidizing, the education system. And as soon as colleges saw that, hey, the government's going to flip the check for this, they just started pumping up the cost because they knew that, the government was going to, keep shoveling money at them. And same thing happened in medical is, aspirin doesn't cost, $50 a pill. A lot of the stuff that they charge you for in the hospital. I mean, if you don't believe me, next time you go to the hospital, ask for the cash price. There's an insurance price and there's a cash price, and it's a very, very different price. So
yeah, and the reality of the situation that we're in is, unfortunately, because we humans, don't want to work. The reality is we have this system designed to force people to do things they don't want to do, and that's what we're going to have. And they are not going to change that, because if they did give universal basic income too early, the whole system would collapse. Mm-hmm. And then so it's like,
I think two things. I think we'll have to see something before robotics are fully there. But what I think is going to happen is it'll be some kind of credits where it's like you can trade this for like power and food, but you're still going to have to use money. If you want to go to the movies or you want to go play golf or you want to go out to eat, you're going to still have to have money, which will incentivize people to continue to do the jobs they don't want to do. To Taylor's point. Number two, separately, going back to just a real quick comment on the medical side, Carrie my wife was an auditor for a hospital company for about 10 years. And one of the things that's maddening is there is a law that says that you cannot bill differently if you accept Medicare. You cannot charge Medicare $300 for something that you charge Blue Cross Blue Shield $100 for. So what ends up happening is pretty much every year, Medicare lowers what they reimburse. So let's say Medicare reimburses you 35 cents on the dollar. And as a hospitalist, or as a physician, well, I need to make $100, so I got to charge $300 so we get $100 back from Medicare. Well, if you do that, then you have to charge $300 to every insurance company by law. So then if the next year Medicare comes back and goes, hey, we're only giving you 25% reimbursement, now you're going to charge $400 to Medicare, which means you got to charge $400 to all the insurance companies. Well, these insurance companies have to raise our premiums, and it just keeps going. However, cash prices do not apply to that, which is why the cash price is often so much smaller. So I was literally quoted $1,300 to get an MRI. Like, what's the cash price? $350.
Yeah.
Okay, we'll do that. You know what I mean? Because I hadn't hit my deductible. My deductible was $3,000. I'm like, so I'm not trying to pay $1,300 for something I can pay $350 for.
Exactly.
So it's just the system is incredibly broken. But the problem is there's so much money made. Matter of fact, not large employer the medical industry. So I don't know how we change it, because you're going to bankrupt an entire industry to fix it. You get rid of the middleman, you're going to get massive layoffs.
Well, the thing with the medical industry is, that really needs to, get fixed is what we're talking about, is the cost. Because, it's not, everybody wants, not everybody, but there's, the section of people in the US that want government funded healthcare. And it's not going to do anybody any good if tax dollars, our money that's taken from us by the government, is used to pay for overpriced healthcare. The only difference is that some people that make more money, might pay for some of the people that don't make a whole lot of money, the quality of healthcare will go down, and the cost is going to stay the same or go up. Based off of what Jeff was just talking about, because just inflation is going to keep going up and up and up. Really, the only way to fix these things is, one, get government out of them, and two is to fix the cost of it. And
like you're saying that, get the government out of it, but that's the thing everybody wants to turn to fix the problem. Like, this was the maddening thing to me. And Robert, our brother, works for the military right now. He's a helicopter mechanic. Mm-hmm. And when the government was shut down, he wasn't getting a check. Mm-hmm. But our father got his Social Security. Mm-hmm. There was not one Social Security check missed. Now, explain that to me, why the government can shut down and pay Social Security checks out, but it can't pay, military.
I know why.
Contracting employees.
It's because the military is funded by the general budget, which has to be approved every year. The budget for Social Security is mandated by law based on the receipts of the taxation that's ongoing. Just like even though the IRS was shut down by law, all of us that did extensions had to send our taxes in by October 15th either way, which is bullshit, right? It's like, so I can't fix the problem. I can't talk to anybody. I can't get help, but you're still going to penalize me if I don't send the money in, even though nobody's there. But that's why. So Social Security is its own separate segregated budget, which is why it's still, now I don't know why the military's not. That seems dumb to me. Or for that matter, air traffic controllers, but that's how it is under the law right now. But I do agree from an ethics and a principle perspective, Taylor's 100% right on this. And there's also, by the way, there's also a financial, behavioral aspect to this, which is one of the reasons why people want the government to solve healthcare is the perception of free. Right now, all of us know, particularly those of us who pay taxes, and thank you so much for Michael and his service and his brothers and I guess sister services in the military over the years. I'm so grateful, but it's a motherfucking expensive venture, and all of us are paying a pro rata share. But we don't see that per se. It's not broken out that I paid for 1.2 thousandth of a Tomahawk missile, right? It doesn't break that way. So what it comes to is, most people, Christmas is coming. If you have $500 burning a hole in your pocket and your son really wants, or your daughter really wants a video game system, or for that matter, you do, you probably don't necessarily mind, if you got the money to do it, going and buying it, because it's something you want to spend your money on. Nobody wants to spend their money on healthcare. And so it's very challenging to make it a market-based solution, because so many people will choose to not get coverage and shit hits the fan, and then they the taxpayer, right? So we've got a multitude of things that are a problem, not just the pricing of it, but the fact that the consumer in the same way that I don't want to pay for B-2 bombers, but I sure as hell want the best military in the world, and we're spoiled. People forget, they shit on American. People around the world kind of mock the American medical system, and it's ridiculous, and it's expensive, and it's terrible for like the regular stuff because of how expensive it is. However, if you're a billionaire in East Asia or India or the Middle East and you get brain cancer, what do? You fly to MD Anderson. You fly to Mayo Clinic. You fly to Johns Hopkins. You don't stay in your country with socialized medicine. Why? Because we pay the best. We have the smartest people in the world, and we are the leading edge of medical technology and solutions.
Well, even in Canada, in Canada, there's two separate medical systems. There's the basically the socialist one that is run by the government, and then there's private practitioners that the rich go to, so that they don't have to wait in the lines and they get better quality. And so, there's still like a caste system, to where it's like, yeah, you can wait 8 to 10, 12 hours just to get seen in a government run healthcare system, and that's just to see the the screener, the person that takes your pulse and all that, and then hopefully they set you up for to see a doctor at some point. Whereas the people with money, they're still going and getting great health care. They're just getting it from a private practice. So,
Yep. Same thing.
But at the end of the day, this is the problem. I mean, the founding fathers knew about this problem, and that was when power gets too centralized in anything, then that's where corruption comes from, and that's what we've traded in America is we've centralized the power in the federal government. So anything that you eventually give to the government for a time, it will make the system better, but ultimately you end up just like what we were talking about earlier with hospitals, where there's a group that will get in, they will manipulate the government in order to make the profits and keep it for themselves. And that's the reality of the situation that you see ourselves in right now is like the reason why we have problems in healthcare is because the federal government gets involved, it centralizes the power, and then they lobby Congress in order to get laws written in their favor in order to have that money go to them. It doesn't go to the doctors. It's not going to the nurses. It's not going to the staff. It goes to the administration. That is where it's like, I know this feels like this didn't happen this year, but at the beginning of this year, Elon Musk found through his Doge all the corruption that was going on within the federal government where charities were getting money that were really being funneled back to politicians' families.
Yeah. No,
And
I actually did an episode on it with Drew over at Blockchain Basement, and where we actually showed where the money went. Like, it was that USAID, and all the money that was going to that was actually getting funneled to these different climate organizations and different voter rights organizations that was actually going to fund all of the stuff that was happening on the streets during that time.
yeah,
I don't want to get banned or anything, but I mean,
but on that flip side, I mean, we didn't see the Republican version of this, which is usually done through military contractors.
Right.
Military contractors, funnel money to Republicans. I mean, that the Bush family made a ton of money this way.
Absolutely.
And so Dick Cheney, I mean, that's you got. But like, this is the problem with anytime you have centralized power. Really, the name of the game or how you make money in the world today is you figure out how to lobby Congress. And then you lobby Congress for a law that benefits you and your little group of people. And that's how you make a ton of money. But for most people in the world, most people just don't care to be that type of a person. They want to just live their life and, live it in a normal way where things aren't extraordinary costs for, basic services like in the healthcare industry. But
Hey guys, I gotta let you go. I'm at my I gotta go to this appointment early. I apologize. I'm gonna have to drop off, but
No
I've
worries.
enjoyed the discussion.
All right, man. Take
Solve the
care.
world's problems in the next 10 to 15 minutes and just let me know what's happening and when my check's coming.
Sounds good. I already
All right,
got
man.
everything taken care of. I got the apocalypse cabin, so I'm good.
All right, there we go. All right, I just need my invites in the mail. I'm sure. I'll talk to you guys later.
Yes.
So I'm actually going to bring this up because I think people in the legal industry have been debating this very heavily, and that's the use of AI within the legal industry. And I will ask people all the time, would you want an AI to be your judge or do you want a person to be your judge? And universally, people will say a person.
Mm-hmm.
And I would tell you,
I
would rather have an AI be my judge.
I would
and I'll
too.
give you an example of something that just happened. We had a hearing, and one of my attorneys was in the courtroom, and he was watching a divorce proceeding happening. And the judge was a female, and the man was asking for more time with his kids. That's what he wanted and ultimately the judge remarked, well, because you have a porn addiction, I believe this divorce is your fault, and awarded him less time because of that. And the attorney in my office was like, it was terrifying to watch that was her determination of whether how much time was going to be spent with these kids, with each parent. And ultimately, I think at the end of the day, when we look at these problems that we have, if we can have a good AI that behaves in a good way and follows certain rules and does everything the way it's supposed to, what we hope it can do, AI can solve a lot of these corruption problems because it won't have these incentives. Ultimately, I think you're going to see a huge battle between the wealthy class and legislation trying to convince people that AI is evil and that you shouldn't want it because it's going to hit their pocketbooks. But ultimately, what's going to end up happening is the nation that will integrate this the most will far exceed any other nation. And I don't know which country
is going to be more efficient.
Yeah, they'll just become so efficient that eventually, my projection will be is that America won't, because America has too much corruption in its system right now, and the wealthy people that hold the money don't want these systems to be efficient. That cuts into their profits.
Oh, they benefit from the inefficiency. I mean, a perfect example is the interview I did with Kevin on Friday. For the where he's tokenizing that legal fund.
Yeah.
Historically, because of the inefficiencies, people like me and most of the people out there, if they ever want to bring a lawsuit against some huge corporation or something that has endless resources and an army of lawyers on retainer, they have no chance. Their best chance is to for them to come back and offer a settlement to settle out of court. And so really, if AI was able to look at all the facts and just in a matter of a couple of minutes say, these are the facts, this is what's going on, this is my judgment, and it didn't take years and all these drawn out processes that basically grind people that don't have the resources into dust to where they can't afford to any justice, then yeah, no, I mean, that's really where we need to go to. But you're right, the people that are in power don't want to give up power, so they're not going to let those processes take root.
Yeah, I mean, lawyers are fighting it tooth and nail right now because it will destroy the legal market if we came up with systems like that. But I mean, AI is getting to the point; it's not there yet. It still makes a ton of problems, but it's from the first time I used AI till now, it's light years ahead of where it used to be. Mm-hmm. But if it does get to that point, I've told this to all the attorneys in my office and everybody else. I go, I will happily lose my career if it made basically law almost free for everybody. I would happily go, I'll go figure out something else to do with my life. Because if you could make it so we had a fair system where everybody was on and all we have to do as attorneys is just say, we're not needed anymore, then that's the way we should go. I mean, that's the reality of the situation. And it sucks for guys like me that spend all that time and effort to get to where I am. But ultimately, I know in the long run, like, it's going to be better for me because it can go across the board to everything else. If you could have a completely fair legal system, I mean, it would drastically improve everything in society.
Well, and you're good at evolving. I mean, you've done everything from putting yourself through law school, flipping houses, and you have the title company, the law firm, you're in crypto and you do investing, and so I mean, you're going to land on your feet, But yeah, I'm sure there's a lot of lawyers that have all of their chips are in their legal career, and they haven't diversified. Well, what do we got here? Yeah, we got a couple minutes, but yeah, I guess, I mean, I've been kind of watching the markets while we've been live, and we've been getting a little bit of a crypto pump. I don't trust it, just like yesterday. I wasn't really trusting that weekend pump. The low volume. Anytime on the weekends when there's low volume, anytime there's pumps, I'm always very skeptical. So But just since we went live, some of the projects have done like 4, 5, 6% pumps. So, I mean, are you seeing anything in the markets right now that's justifying this?
It's just a bear market bounce. I mean, yeah, like right now I mean, we had such a drawdown that there's going to be a bounce eventually where you know, you just got to be patient in times like this. Let things settle on its own and work its way out. You know, if you're doing anything like I'm doing, which is I watch the ranges, and like right now it's getting to the top of the range, and so I'm gonna pull some money out and put it on the side and wait to go to the bottom of the range again.
Yeah, we got a Canton Network is the top gainer on 24 hours at almost 12.5%. Good to see. It's actually held up pretty good. With all this dumping that's been going on, I mean, it's still sitting about 8.5, almost 9 cents. So, I mean, it's actually held up quite well considering.
Yeah, that's good. I was going to do an analysis for our newsletter coming up here. Is what's doing the best when things are going down? I mean, everything's going down, but like, what's holding its value the best? And looking at things, Canton, you're gonna have to watch because it's new, and so you don't really know what's going on. But things that have been around for a long time, what kind of keeps its value in bad times is a good signal.
Oh yeah, just somebody in the chat was talking about Drew. My buddy Drew that's on the show sometimes. He's gotten a little bit bullish on Canton. I actually brought it to his attention. It popped up one day on RWA.xyz, and it had like 400 billion of TVL. It knocked Ethereum out of the top spot, and then what was not Prometheus? What was the other one? Providence. Providence took the second spot, and then it was Ethereum, and then they changed how they measured, and so they're not sitting up there anymore, but they still dwarf Ethereum. But I'm very bullish on Canton. It was and one of the big reasons is the tokenomics. One, it was a fair launch. The team didn't keep any tokens, and there was no VCs. All the tokens were released to the public all at the same time, and so of course the amount of TVL that they had right out the gate, and just the the ecosystem. I'm seeing a lot of really good things. I'm just waiting for some good liquidity pools to dump it into. I want to see if I can find some full range liquidity pools or lending or staking, because I just really want to just slow grow that bag. But pretty much that's where I'm at right now. Kind of closing thoughts. I'm really just in the mode right now because I'm not going to sell any of my assets unless absolutely necessary. And so I'm just going to put them where I know that I can just stack more of those assets for what I see as the inevitable pump. It might be a slow grind up. It might be a violent move up. I don't know. And I honestly don't care. It's just my whole thesis and my whole investing strategy has always been I'm investing long term. I'm looking to stack assets. And when my portfolio gets to the point to where I can, each month take out a portion of it to augment my income and still have a decent portion that I can reinvest and keep growing my portfolio, that's when I'll start taking profits. But until then, I'm just going to keep rolling with what I got. You got any closing thoughts, Taylor?
Nope, just be patient and watch what's going on and get good advice. And the end of the world isn't yet today. So,
oh, and if you're not already, it's super affordable. It's like $19.95 a month, but we put it out. It usually gets sent out about 6 a.m. Pacific time. But our newsletter, a lot of the boiled down alpha that we have, the things that are informing Taylor to make the smart moves that he's been doing in crypto and in traditional investing, and for me to what I invest in as far as DeFi and crypto and things like that, and different moves that I make, is all boiled down into our newsletter every morning. So if you're so inclined and want to check it out, go ahead and subscribe. And yeah, I appreciate you, Taylor, for taking the time to chat with the community and chat with me. But until next time, Veteran Crypto out.
See you guys.